Everyone. So I might fire away because you guys have all had lunch, so we can get into the start of the second part of the day with these lovely gentlemen. I might start with the first question just quickly, maybe for everyone on the panel. Um, there's a lot of talk, obviously, around tokenization and RWA. How do you define success when it comes to RWA strategies in traditional banking or venture portfolios? So what's the metric of success? Maybe starting with Alex.
Hi everybody, I'm Alex, and maybe I do a very quick intro first about Standard Chartered Ventures. So SC Ventures is the innovation arm of Standard Chartered Bank. So we have a venture builder as well as a CVC arm. We have about 30 odd different ventures that we built, and there's about 50 different portfolio companies that we've invested in. So I think towards the question, what do we see as success? I'll draw an analogy to what we did with Zodiac Custody. So we created our own crypto custodian, I think about 4 or 5 years ago. And success, I see it's in terms of revenue, customers is doing well. But more importantly, the Standard Chartered Bank in Dubai has now launched its own crypto custodian services. So I think that's a great win for us in terms of both financially and strategically. So I think for success for RWA, it's something like we have a venture called Libera. I think Aaron is somewhere in the middle there. They are trying to tokenize certain things. I think the success is when the bank follows suit, right? So the venture that we built is almost like 3 years ahead of the bank, testing the waters and making sure everything goes well. And then once the bank's risk appetite is I'm trying to look for the proper word so it doesn't sound too bad, but okay. Let's just say the bank is happy to go ahead, and then that's a win for us.
Thank you. Over to you, Charles. Maybe, again, quick introduction, and then what's the metric for success?
Hi, good afternoon, everyone. Sawadee ka. My name is Charles, and I'm with UOB Venture. So essentially, UOB Venture is the private equity and venture capital arm of United Overseas Bank, a bank that's based in Singapore. And at UOB Venture, I manage a blockchain technology fund that invests in early stage Web3 crypto companies globally. So in terms of the question about like what do we see as success as a VC, right? I think obviously for us as a VC, we invest very early stage. So a lot of times the projects that we look at, typically they have limited or sometimes no traction at all. So I think for us, success is really whether the founder and his team is able to translate that initial idea into real traction. So specifically for RWA, actually we see a lot of RWA projects, and I think a lot of times, a lot of the projects that we have spoken to, they have very great idea, but the execution part may not be that straightforward. Because nowadays, actually, it's quite easy to build and deploy a blockchain, as all of us know. But how do you actually solve the problem on the supply side, meaning get asset issuers to actually issue assets on that chain, and also on the demand side, how do you actually get institutions, retail to actually buy those tokenized assets? So I think there are a lot of execution that is needed. So I think for us, success is really being able to drive real traction onto that RWA chain.
Thank you. Over to you.
Hey, hi everybody, I'm Alan. Same thing here, quick introduction, right? I'm from Woori Venture Partners. We are one of the, I would say, the first generation Korean fund. More than 40 years of history, we are part of a large financial conglomerate in Korea known as Woori Financial Group. People know it as Woori Bank, but we are run as a separate fund, so to speak. Have been investing for more than 40 years. As I mentioned, Web3 is a space that's interesting for us, right? I prepared some notes, but I'm the third speaker, so I think they took whatever I wanted to say, right? But I think more importantly, as a fund, I think beyond what Charles and Alex has said, right? I think, we do have, we do look for, where do we think the asset opportunity for the companies that we are looking at. That's not to say that when we look at a company, we prioritize the exit. When we look at a company, we have to decide for ourselves on the balance of things in terms of the founder, in terms of the technology, in terms of the unit economics of the company, ranging from revenue all the way to the bottom line, do we think they will hit the stage where, right, there's a good exit opportunity? And for us, because we are also part of the bank, it's not simply we go in, we wait for the exit. We go in, we try to help them to grow in a way. I think that's true for both of them also. Help them to grow in a way that they can be best positioned for the right exit. I think that's very important for us. Yeah.
Thank you. Maybe, yeah, there's a lot of continuity in the answers, obviously, because all wearing sort of CVC hats. Maybe for myself, Jitendra, first a quick introduction and, yeah, what the measure of success would be for RWA.
Sure. It's great to be here as a builder in this panel. So we at Helix, I'm Jitendra, I'm running Helix, the RWA DeFi protocol. At Helix, we are on a bold mission to become the Blackstone of Web3. Idea is to bring a multi-strategy stablecoin ecosystem which recreate the entire banking rail on-chain. Very ambitious goal. Idea is that we bring in a dollar-pegged currency. We bring in a saving account equivalent in the form of yield portfolio, but also bring in on-chain and income portfolio and a growth portfolio so that the entire risk-reward curve spectrum could be accessed from a single ecosystem and a single platform. We are a team based in Singapore, has a track record of doing more than $500 million in private credit in Southeast Asia, with zero defaults over the last 6-7 years. So bringing all of that expertise and institutional understanding of the regulatory landscape, of the technology, of finance, and recreate these rails on chain. Now, to your question in terms of what could be the success, I guess the current state of affairs is many institutions have done small pilots. That's how we started as well. We were private credit expert. We started doing some pilots on tokenizing our private credit fund, structured private credit deals, but the real success is building, as some of the fellow panelists have said, like the distribution strategy. Really building new markets and having these products distributed across the broader ecosystem. And we are seeing some of that unlocking now as we speak.
Just maybe segueing from your comments around success, then maybe reversing the question, and where do you see sort of the biggest gaps that are hindering, more accelerated adoption from the institutions you're dealing with, as well as obviously from the other panelists, your respective parent institutions?
Sure. From where I sit, I see the biggest gap is the disconnect between the regulated capital markets and the on-chain execution environment. As D3 Labs previously spoke in their keynote, the current version of tokenization is you have redemption rights, you have yield rights, but the legal ownership still remains off-chain, and which is okay. But when it comes to institutional adoption, what most of the large institutions, and Charles and team could probably opine on that, is what TradFi large institutions are looking for is not just the technology wrapper, but also the legal stack, the custodial stack, the distribution stack, all of that fully integrated, and all of that mirroring the current traditional systems which are in place. Yep.
Okay. I'm going to go in reverse order here and come back to Alan. Alan, how do you see tokenization of real-world assets impacting things like cross-border investments?
So I would speak on the viewpoint as an investor, right, as a VC, right? So tokenization, cross-border, for VC, there are certain things that we do as part of the business. One of that is that obviously we set up funds to invest in company, to help them grow, to help them exit, right? That part of the equation can effectively be tokenized as well. It's still a bit gray, meaning, there's no regulatory approval. But what if you can tokenize your VC fund or PE fund such that you can reach more people? The guy in Brazil can actually invest a small fraction in your fund. Small, but it adds up to something that's big. They get access to the same portfolio that typically is only institutional investors has it. So that's one that I thought could be quite interesting. Still in theory, and I know a lot of startups are trying to do that, but they're trying to do that for money market fund, which is different, right? Hedge fund, they're not doing that for private equity fund. So that's one. Number two, cross-border, right? Because it's tough because you are being very specific. Real asset, cross-border, right? It's very specific. I'll try to broaden it in terms of investment strategy. So for us, I would say it's a belief, a thesis that, if you believe that the old world way of doing things in terms of managing, sending money is slow, expensive, prone for disruption, right? That directly translates to certain natural theses you'll go for. Number one is a bit like what you're doing, the use cases at the end, right? For the man on the street, what does it mean? Remittancy. For the SME, what does it mean? B2B payment. Is there any way where you can invest in cross-border real asset, let's say stable coin, right? That could help to facilitate that disruption. That's one. Two, the underlying infrastructure. All your settlement system, all your financial ops system, right, that is at the back. That people don't see, that the operators are very good at, but people just don't see, right? You need all these things to make it possible. Effectively cloning like a banking system at the back. But for Web3, we are keen to invest in that. The last one, I cannot remember. Tokenization is that's definitely interesting. DeFi, actually interestingly, even though it's not a DeFi conversation, I think DeFi where it leads to is that there are actually a lot of innovation at DeFi level. We are very keen to see, how can we draw the crypto liquidity? How can we take innovation from DeFi and to bridge it towards the real world, the Web 2 to Web 3 gap? And how do we in such a way that, all of us as bank will go in and say that, hey, you know what, I want to invest in that because it's regulated, it's compliant, it's sensible. Okay, I'll just pause because I think running out of time. Yeah.
Thank you. Charles, you've been in this sort of Web3 space for a number of years now. What signs are you seeing that institutions are starting to be more and more ready for tokenization and RWA?
Yeah, so I think in terms of RWA adoption for us as a regulated financial institution, obviously we pay a lot of attention to the regulatory framework. I think in Singapore, EU, there have been some progress, but in a lot of the other countries in the world, the regulations are still not ready yet. I think for real institutional money to actually come into RWA in a big way, first the regulations need to be clear and defined. I think that's one. I think the second is in terms of as a financial institution or as a very large asset manager, at the end of the day, your back-end systems need to be able to support tokenization initiatives. And as we know, a lot of the traditional financial institutions, the systems are quite legacy-based, right? And how do you actually, in terms of like technology-wise, able to integrate legacy systems with the new ways of doing things? I mean, if you tokenize, bring things on chain, how do you integrate legacy system with that? I think that's the second challenge for institutions to come in. Yeah.
Yeah, I think it's quite interesting because I might throw the question next to Alex around sort of segueing from legacy systems. Obviously, Standard Chartered recently launched a Hong Kong stablecoin. How do you see stablecoin products, intersecting into RWA?
Yep. And to be clear, it's just a pilot, right? Just like a lot of the things that banks are doing, these are all pilots. But I think it really helps the banks to start thinking about tokenization, because stablecoin is some form of tokenization, and sets the tone for the entire chain of people who are blocking you. I'm trying to be very gentle in my words here. If you ask my other colleagues who are focused on crypto investments, they have much stronger words, but we are a large organization, right? There's risk, there's compliance, there's ops, there's a lot of people who are looking after the interests of the bank. So I think this is a little gentle way to segue into what happens when we start doing this, right? As we start tokenizing things and putting them on the chain, what are the things that we need to be careful about? What are the things that we are very worried about? So I think this is a very good segue into eventually RWA. I think we also launched a pilot recently with OKX in Dubai, where we are actually using tokenized money market funds as collateral for trading. So that's also a good step and a good way that we start thinking about how this affects us. Of course, these are all pilots, and the realest way that we are actually working on RWA is through Libera. They're actually doing it, right? Go and tokenize stuff, start doing it, and let the bank learn from us. I think That's my simple answer.
There's some, yeah, I think exciting collaborations along the way. And then coming back to Jitendra, like, what collaborations between Web3 native platforms and traditional financial institutions are you sort of most excited about in the next 1 or 2 years?
I think I guess the most important collaborations would be where there is, full stack delivery, all the way from legal stack to custodial to distribution, all fully integrated, with an increasing level of stable coins operating as a settlement layer. It's ambitious, but I think there have been some steps happening where large institutions have started stepping from that pilot stage to start doing, BlackRock's Biddle is one example, Franklin Templeton's Benji is another example. We are ourselves an example where we started small and now we're going full-blown distribution strategy. So I guess more and more of that full stack delivery kind of collaborations are going to drive this whole RWA and tokenization wave to the next stage.
And then maybe just fast forwarding a few years, what do you think will be the biggest change in how institutions approach RWAs?
For me? Yes. I guess probably beyond pilots to actual taking that as a product portfolio level tokenization strategy. Right now, most of the time it is more like, okay, we have this one product, let's tokenize it, bring it to Web3 audience. But the actual traditional business on the fiat rail still is running on the old stack. It'll take some time.
How many years do you think?
Yeah. I think Centrifuge General Counsel was here earlier in the morning, and he was saying this will take about 10 to 15 years. I'm more optimistic. I guess it's 3 to 5 years where we'll start seeing some of this, with CBDCs coming into picture, and many regimes are coming with a lot of these stablecoin regulations in a jurisdiction like Singapore, Hong Kong, Japan. All of these are welcome changes and kind of heading in the direction of creating all these Lego blocks, which eventually kind of increase that comfort level of getting more and more on-chain execution.
Right.
Yeah.
I might throw that question to the rest of the panelists, like how many more years until the POCs that you guys have touched on sort of reach more of a full rollout across the institutions? Maybe optimistic range and a pessimistic range. Alan?
We are here, so, we are biased, right? We are by nature optimistic, but I think it's hard to put a number of year, right? I think one way to articulate it, right, is to look for, I guess, the signs that we are getting there. I think that's the way I look at it, right? And there are many ways to slice and dice it. One way is the push or the pull factor. So, for example, people have been talking about tokenization of T-bill treasury. It's a low-hanging fruit because they are supposed to be safe, supposed to be relatively high-yielding, right? The crypto guys want it. They just pump it to a DeFi. You will pretty much do well, like what BlackRock has done, 1.7B. But no one has been talking about, or they have been talking about it, but not about tokenization of, let's ignore real estate, tokenization of commodities, tokenizations of forestry or whatever, right? That's interesting because there are certain factors, right, that's in favor of that as well, right? Two things, right? Tariff war, increase in commodity prices. When prices increase, people want access to that. There's a demand for it. Number two, commodity like gold is actually a very good natural hedge, given what you are seeing in the world. That's just one particular, I should say, though, admittedly very silo thought, just one asset class, but we need to see that unlocking in different asset class. Two, regulators. Regulators play a very, very important part. I know in Indonesia, OJK has the stable coin and RWA, what is that? Sandbox. Hong Kong, obviously, the stable coin is something that's interesting as well. Singapore is anchored by MAS, Project Guardian, right? When regulators provide certainty, right, it kind of opened the box for the banks to come in and say, now I will try. When there's uncertainty, it's very hard for, I guess maybe we are more innovative, but for most people, it's very hard for them to take the step, right, and say, I will try. What will MAS think, right? What will the Bank of Thailand think? I think that part, I'm seeing shift in that narrative. So 2 years, 3 years, I don't know, but the signs are there to support my view that I'm optimistic. Yeah.
Very diplomatic answer. Charles?
Yeah, actually, I agree with Alan. I think we are already seeing quite encouraging signs in the market that institutions, asset managers are investing money to build the infrastructure to get ready for tokenization initiatives. So at UOB, for example, we have a dedicated team, a dedicated department that's set up just to coordinate the blockchain initiatives across the group. I think that's one, that we are seeing institutions investing money into this space to build the infrastructure to get ready for it. I think the second thing is we are seeing, at least for UOB, we are seeing that tokenization is not just an innovation idea anymore. We are seeing business, risk, compliance teams coming together to build the tokenization initiatives within the bank itself. It has already moved out from an innovation lab kind of structure into a bank enterprise-wide initiatives with dedicated team that's driving it. So I think these are the two encouraging signs I'm seeing in the market. So I believe maybe over the next 5 years, we will see some real progress. Yeah.
Alex, I think the audience is also, they all have vested interest being here in the future of tokenization, RWA. So how long is the load time, so to speak?
I think we're probably going to see it happen in different countries, right? Depending on the regulators. Like all those that already have sandboxes, probably going to see it a lot quicker and then slower for the rest. Just echoing what Charles said, we do have our own digital assets strategy team, and not only within SC Ventures, but within the bank itself too, right? And they are sitting right next, reporting to key business holders. So it's a key part of a strategy, right? Digital assets are here to stay, but how fast they come is tough simply because right now from bank's point of view, if I want to tokenize, let's say anything, it's actually more expensive to me. There's no cost efficiencies because nobody is using it yet. So if I'm trying to be innovative for the sake of it, right, trying to push people along, let's say between UOB and SCB, right, if you want to do something, there's no infrastructure. We actually have to build an additional layer on top of the existing infrastructure to do that. So until everybody joins hands to say that, hey, we're going to do it, because altogether it's cheaper, but if I'm the only one or like only 3 banks are doing it, it's actually more expensive for us to execute. So I think there needs a general consensus, and that will only come from regulation. To answer your question, I also say 5 years.
Maybe just staying with you, Alex, on that point, because Alan touched on, things like tokenization of T-bills. From your position, Alex, are there any specific asset classes that SC Ventures believes that are more or best suited for tokenization? And what's the current institutional appetite for those asset classes?
Again, I throw back to Aaron from Libera. Anything that they are doing, that's our exact view, right? So I think we're starting with securities, and eventually debt. There will be, and obviously money market funds, which the bank is also doing. These are the key asset classes that make it easy. I think eventually anything else, let's see how the RWA goes, right? But everything that our other fellow panelists has talked about, gold, real estate, would come, right? But again, I emphasize that there needs to be an industry-wide movement. If you're the first one in, let's say, real estate doing this, it's actually going to make it more expensive for you. Although there's a lot of cost savings that come, that only comes if everybody's on it. If not, you have to build in a separate layer into the existing system, and it's going to be more expensive. So, yep.
What's the fastest way to get everybody on it?
Government push. And I think that's my point of view. I think all the different industry leaders have to come together and push for it. Events like this on-chain forces everybody to come and think about it, right? And reflect, why are we doing this, right? What's the future and how is this going to affect? But just like every new technology, there's always a strong resistance to change. Existing vendors of the existing infrastructure are going to resist because it's a good margin, right? If I'm CEO of existing technology, I'm making a lot of money and I don't have to invest a lot to do this. If I want to spend more money to try to push it, it's a big risk for me. So I think that's always the mindset change that we need to go to.
And maybe Charles, like diving deeper from the bank's perspective, do you think what you're doing from a CVC perspective is now being seen more as strategic alignment, or is it still sort of like, a sort of offshoot project, innovation lab type of lens?
Yeah, I think it's definitely evolving. I wouldn't say it's a full-fledged kind of strategic alignment at this point in time, but definitely not an initial idea pet project kind of stage. So I think we are somewhere in the middle. For us, we saw the opportunity to invest in Web3 blockchain technology 4 years ago. So we launched a fund that was back in 2021, just investing into this space. And through our investments, a lot of times we bring our portfolio companies to work with the other business units within the bank itself. So that's one of the value add that we bring to the bank. I think the other thing I want to point out is that tokenization is definitely moving to the core of the bank, but it takes a lot of time. And for us as a regulated financial institution, we need to pay attention to systemic risk because we operate at scale. So definitely, from my point of view, tokenization is moving closer to the core of the bank. It's no longer just an idea. We are seeing real money being put to work. We are seeing the bank hiring developers, engineers to build the infrastructure for the bank itself. But I think it will take time. And definitely for us at UOB, we have started to tokenize some financial products already. So recently we actually issued a digital bond together with Market Note, and we are also exploring tokenizing several other wealth management products. I think for us, we'll start with wealth management products because there's a low-hanging fruit, but over time we move on to other asset classes as well. So to answer your question, I think it's no longer just a pet project. I think it's moving closer to being a core business of the bank. Yeah.
And then maybe flowing on from that, but for yourself, Alan, like what partnerships, ecosystems, or even investments from your perspective do you see having the largest impacts in reaching or accelerating the so-called 5-year horizons, or the average 5 years that this panel has sort of put out?
I feel bad because I'm kind of summarizing what they say, but it's easy for me, I guess. So I think there are two things, right? Number one is the what, and number two is the who. The what, like they have said, right, consists of two parts. So I think number one is the dialogue, like this, the conversation. But people will say that all you do is just talk. Where's the execution? That's where the POC by the banks, regulatory sandbox led by the regulators, right, is a good starting point. The second question to ask is who should be involved. They have actually given a lot of clues. The answer is that not just one bank. The answer is that the banks need to pull together their resources, need to pull together their liquidity, because just one bank doing it is too expensive, it doesn't make sense, right? And you want to do cross-border, right? Naturally, it's hard for a UOB to do it on its own, right? Versus you want to do something, let's say in London or Hong Kong. So it makes sense on that part. The other part that you have to account for is also the regulators, right? As far as possible, I think engage in regulatory dialogue as early as possible, right? For the reasons that they have mentioned before. So I wouldn't belay that. But the third thing that I think has been missing in conversation, right, is actually working with the more agile, I said more agile, quote unquote, more agile crypto-native firms. Your L1, your L2, right? Doesn't matter they're private or they're public chain, right? Working with those guys, because effectively what they say in terms of capability, right, it's a very traditional play. You either build or you partner or you invest, right? Can you partner with, just give you an example, right? Polygon has their own real-world asset chain. I know they're working with DBS, they're working in Noburai. That's one example of a partnership between, the Web3 firm and the bank. And there are a lot of different examples, even between the MAS kind of that Project Guardian, right? You see the banks over there, but you see guys like Digital Exchange, you see Ant Financial, who has their own blockchain technology. I think that collaboration could effectively bring the cost down and bring in more partners to the space, right? Yep.
Okay. We have 10 minutes to go, so I might change the format slightly, and we will do some more, I guess, rapid fire questions. So some quick answers from the panelists. So I might start with you, Jitendra. What's the biggest misconception about RWAs in finance today?
Biggest misconfusion about RWAs.
One sentence or less.
that they are the magic solution that will completely change the entire financial system.
Okay. Alan? Same question.
The other spectrum, right, there's a useless solution. It's just all hype. But if you look at last year, it's 40 million in tokenized, 30 to 50 million in tokenized asset. So it's something over there. It's not just hype.
Not just hype. Okay. Charles?
Biggest misconception about RWA, that they are too risky.
Too risky? Okay. Alex?
Traditional bankers think it's crypto.
Okay, maybe staying with you, Alex. What's one RWA use case that's overhyped, and what's one that's underhyped? Overhyped is pretty easy, right?
Overhype is tough. Want to offend anybody?
Putting the panelists on the spot here. So overhyped and underhyped.
Can we go the other way around?
No, we can't. Well, feel free if you wanted to jump in, Alan.
Good.
Why is it like that? Not. Okay, so overhype for now, maybe this is controversial. Maybe it's real estate because in many years but haven't gone traction. But it's not the fault of the technology. It's more of regulators and deed and title, right? You can't kind of match it. That's overhype. Underhype, I would guess all your private credit. The reason because everyone talk about your TBA, blah, 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 but they don't know that financing, invoices, private credit is actually what drives real economy at the back. All companies need it. Yeah.
Jitendra?
I was about to say the same. In my view, maybe the overhyped is so everyone is doing it like T-bill tokenization, RWA tokenization, and everyone jumps on the T-bill tokenization. I guess the biggest underdog really is the other fixed income instruments which are on the higher end of the risk reward curve, like private credit. And this is precisely what we are focused at, like having a stablecoin strategy, which obviously, if you're talking about stablecoin, it's best not to be backed by private credit because stablecoin by definition need to be very liquid. It needs to be dollar pegged. Start with money market. But don't stop there, go further into the risk reward curve, and that's where, the private credit start, like good quality, capital preservation, risk adjusted, private credit instruments is, I think, probably is going to drive a lot of volume. And that's what we have focused at.
Charles?
Okay, I may be a bit biased because I'm a fund manager. So to me, I think what is overhyped in RWA is actually tokenization of private equity funds. Because actually we tried it, but actually we think that it's quite difficult to execute because by nature PE funds are closed-ended funds, and it's quite challenging for the fund manager to manage all the redemptions on a regular basis. So for me, I think overhype is tokenization of private equity funds. Underhype, actually I do agree with Alan. I think private credit, but I will not use the same thing. But I think for me, underhype would be maybe trade finance. I think there's a lot of liquidity that's locked there. And tokenizing that liquidity makes a lot of sense. Yeah.
And coming back to Alex.
We'll start with underhype. Yeah, underhype, I agree. Per credit, it's makes a lot of sense. Overhype, still don't have a real answer yet. There's too many. Don't want to offend anybody, but I'll take my Fifth Amendment and skip that.
Okay. But then maybe staying with you again, Alex. What's the most exciting region in Asia for RWAs?
Since I'm based in Singapore, I'm just going to say Singapore.
Charles?
I would say Thailand because the Asia's first RWA conference is held here.
Alan?
I'm Singaporean and being in Singapore, I want to say Singapore. But then Hong Kong could be interesting. Hong Kong used to be under the radar. But you look at America now, they actually, sorry for the word, but they kind of get their shit right. They kept progressing ahead, which is also why I think SCB, out in Mocha, they are doing the stablecoin thing. It kind of have a very exciting vibe about it. Yeah.
Jitendra?
I think the whole Southeast Asian region is really the ground for doing a lot of RWA experimentation. Reason being, you have a small geographical patch, which is like 10, 11 different countries, 10, 11 different currencies, a coordinated effort around having stable coins used for remittance, used for, maybe payment rails, as well as there's a lot of private credit happening because Southeast Asia also represent the burgeoning emerging market kind of private credit on trade financing, on microfinancing, multi-financing, etc. So many of these RWA use cases of driving the real world economy through private credit or remittance, cross-border settlement, etc. All of those experiments could be done in this region of 10 to 11 countries in the patch of Southeast Asia.
Alan, you touched on things like the tariff wars that are happening, etc. Which global micro trend will accelerate RWA adoption the most? Things like inflation, interest rates, or de-dollarization, or other things? Maybe rapid response answers.
Okay, just one answer. The easiest one is interest rate. Is that enough? Okay.
Perfect. Charles?
Yeah, I would say interest rates as well, because obviously if you expect the rates to start coming down, then people need to look for yield, and RWA provide that yield opportunity for investors.
Alex, agree?
Great.
Jitendra?
Agree as well. Private credit.
Jitendra, which RWA asset class will see the biggest institutional inflow in the next 18 months?
I would like to think that many of the fixed income side of instruments, because they have the yield element, and rest of the DeFi rails are really built on that kind of infrastructure. All of this collateralization and secondary liquidity and various pools, etc. All of those are quite in cognizance of yield kind of products, and so fixed income instruments and particularly private credit.
Alan?
I digress a bit, even though I want to believe in that. Oh, 2 minutes, okay. I think it'll be more of your money market and so forth. The reasons because you think of money market, right? BlackRock has just started to plug themselves into all the crypto protocol. It's just starting. Fidelity just filed for a tokenized money market fund. It's just starting. And 1.7 B is big. It's not big versus the whole crypto market. It's very small versus TradFi, right? And it's a little bit way ahead of private credit. So next 18 months, that's where the path will go. But it's good for us. It shows that a use case that it works. It's actually good for us. Right?
Yeah, with 2 minutes to go, maybe Charles, yeah, which product will see the biggest inflow in the next 18 months?
I would say private credit as well. I think to me it's a very interesting space. I think there are a lot of good lending opportunities out there that are currently not available for the retail investors to participate. So tokenizing private credit allows everyone to participate in those lending opportunities.
Money market funds. Yep. You see what we are already doing in Hong Kong. Using that as, I think it's a very good case example where you use it, collateralize it, and use it as collateral for trading activities. I think that's a very good adoption because it's almost cash, right, and easy to be seen.
That's it. That ends our panel for today, ladies and gentlemen. Thank you,